What is the hidden, crucial secret that grants you the power to accurately predict the chaotic and often unpredictable movements of the stock market using ancient mathematical formulas that never fail? For too long, we have incorrectly assumed that price fluctuations in the financial markets are merely random and completely erratic motions, when, in fact, those movements are strictly governed by specific fractal patterns and precise Fibonacci ratios that repeat consistently across all scales. Technical analysis research conclusively proves that these recurring patterns are the physical manifestation of the collective emotions of investors, which are reliably repeated across varying timescales, indicating a powerful underlying order. This profound realization means you can entirely bypass confusing fundamental data analysis and directly read the psychological blueprint of the masses that ultimately determines price action and market direction. Mastering these specific mathematical patterns is the ultimate key to making confident, timely, and highly profitable investment decisions in the complex modern financial market. I will guide you through 3 powerful mathematical patterns that conclusively demonstrate the market is a direct mirror of collective consciousness. Perhaps you have personally endured significant losses when the market felt euphoric and massively overpriced, or tragically missed the best buy opportunities because you were paralyzed by excessive fear facing overwhelming negative market sentiment that quickly spread. That common, profound, frustrating experience strongly teaches us that the market is absolutely not driven by pure logic, but is consistently fueled by 2 fundamental human emotions: the intense power of fear and excessive, pervasive greed. Isn't it illogical that a massive group of investors, who should be strictly rational, simultaneously make the exact same emotional decisions at specific, predictable points in time despite their unique circumstances? The core underlying problem is that mass psychology creates predictable waves of energy, which are physically embedded within the price structure itself, and we consistently fail to accurately read this embedded code in real time. I personally began viewing price charts not as a random collection of numbers, but as an explicit map of collective emotion that follows precise cosmic mathematical rhythms that can be decoded. Let us now learn precisely how to utilize Fibonacci and fractals to effectively deconstruct this deeply embedded mass psychology. The primary conflict exists between the widely accepted random walk theory, the theory of random prices, believed by many traditional economists, versus the tangible reality of fractal patterns that clearly indicate a structured, repeating underlying order. Fractals are specific geometric patterns that consistently repeat themselves at every scale. This means the price pattern you observe on a daily chart possesses the exact same underlying structure as the price pattern on a 5-minute chart, confounding the conscious logical mind. This crucial phenomenon of self-similarity conclusively proves that the psychological sentiment of investors, fear divided by greed, relentlessly repeats itself at every level, as if the market collectively possesses a strong predictive memory. You must fundamentally understand that underneath the perceived surface chaos, there is a predictable mathematical order that can be scientifically anticipated and exploited for profit. The first powerful pillar is the Fibonacci ratios, which uniquely pinpoint the specific emotional correction points where mass sentiment frequently exhausts itself and reverses direction sharply and decisively. Ratios like 0.618, 0.5, and 0. 382 define precise, magic levels, where investors, acting collectively, decide that the price is either too low triggering massive buying or too high triggering massive selling and profit-taking. Successful investors utilize these ratios not as rigid, absolute lines, but as psychological zones, where the probability of a highly profitable price reversal is significantly amplified and expected. These specific ratios, widely found throughout nature, flowers, seashells, prove the profound underlying connection between fundamental human psychology and the deterministic mathematics of the natural universe. The second powerful pillar is the Elliott wave theory, which interprets market movements as structured, recurring Jalambang sentiment waves, in a precise 5-to-3 pattern, 5 impulse waves, followed by 3 corrective waves. This advanced theory explains that the 5 impulsive waves are driven by collective greed and pervasive optimism, while the subsequent 3 corrective waves are primarily driven by mass fear and intense doubt among market participants. By accurately identifying the market's current specific wave position, you can confidently predict precisely when the current euphoria, impulse wave, is about to definitively end and when paralyzing fear, corrective wave, will totally seize control of the marketplace. Wouldn't it be infinitely more profitable to know exactly where market sentiment will reliably reverse, rather than merely following a trend that is already fatally late in its cycle? The third powerful pillar is collective correlation, which meticulously focuses on how fundamentally different assets, stocks, cryptocurrencies, commodities, move synchronously due to sudden shared shifts in underlying macro sentiment and market belief. Research demonstrates that high market volatility and the clustering coefficient of assets strongly correlate with collective behavior, proving that investors make decisions that are emotionally synchronized and interconnected across different sectors. Your primary task is to actively monitor this overwhelming collective sentiment through precise analytical tools and ensure that your investment decisions are always based on internal calmness and a solid strategy, not based on deceptive, short-term mass panic. Mastering this intricate pattern means you have successfully cracked the specific code of mass market psychology. Imagine the true story of a trader who constantly suffered devastating losses because he frequently bought stocks at the peak of wave 5 euphoria, driven by collective greed, and always sold precisely at the bottom of wave C, maximum collective fear. He decided to diligently study fractals and Fibonacci, choosing to operate from a position entirely outside the deceiving collective emotion. At the precise point where everyone else was panic selling, he calmly bought, and at the point where everyone was consumed by euphoria, he sold his positions with measured planning. He firmly claimed that his consistent profit originated because he successfully stopped being a vulnerable part of the unstable collective market emotion. Why are the precise Fibonacci ratios capable of accurately predicting when the mass euphoria sentiment will definitively terminate at specific, counterintuitive points in time? We will return to extensively discuss the critical role of natural mathematics in governing human emotion in the final conclusion section. Think of the complex financial market as a vast architecture of emotion that is constantly being built, and Fibonacci and fractals are the underlying geometric blueprints that clearly reveal its hidden structure beneath the apparent chaos of price movements. If you view the market as merely a random, chaotic pile of bricks, you are guaranteed to fail as an investor. But if you see it as a mathematically structured, predictable building, you can successfully anticipate both its construction and its inevitable collapse. Your critical task is to become the calm architect of emotion who accurately reads this detailed blueprint, making sound decisions based on calculated pattern recognition, never based on misleading, short-term daily sentiment noise. Take a genuine moment right now to sincerely ask yourself this profound, challenging question. How frequently do I consciously permit the collective market emotion, euphoria or panic, to directly influence my critical investment decisions, even though I fundamentally know it is based on widespread, destructive mass fear? This honest reflection is critically important because successful traders exclusively operate with emotional detachment, viewing mass emotion as merely data that must be exploited, never personally experienced or followed. You must view the market as a collective mirror reflecting internal states, and never as an absolute guide for your own personal actions. As a comprehensive summary, market movements are demonstrably not random, but they consistently follow recurring mathematical patterns, which are the physical manifestation of the underlying collective consciousness of all investors. We have thoroughly discussed three crucial patterns: fractals, pattern repetition across all scales, Fibonacci ratios, emotional turning points, and Elliott waves, the structure of market sentiment. Mastering these specific patterns is the single most important key to achieving emotional detachment, empowering you to invest consistently from a position of quiet wisdom, never from destructive fear or paralyzing greed. Let us now definitively answer the crucial question: why are the specific Fibonacci ratios capable of accurately predicting when the mass euphoria sentiment will precisely terminate at specific, predetermined points? The clear scientific answer is that the Fibonacci ratio is a consistent mathematical constant that reliably governs growth throughout the entire natural universe, from the structure of a sunflower to the spirals of distant galaxies. Spiritually, mass human psychology is subjected to the same fundamental laws of nature, and this specific ratio marks the predictable points of emotional exhaustion or the natural turning point of the excessive cycle. Utilizing Fibonacci successfully means consciously aligning your specific investment decisions with the predictable rhythm of the cosmos, not merely with the short-term market noise. The decisive time has now definitively arrived to completely stop being a passive victim of market emotions and immediately start becoming the intelligent, capable mathematical codebreaker of the collective consciousness yourself. Take one powerful aligned action today. Identify one single price chart you follow and clearly mark 3 important Fibonacci retracement levels on it. Then formulate a calm, measured action plan based on that established pattern. Will you continue passively investing based on emotional panic and misleading news reports? Or will you choose to actively utilize these specific mathematical patterns for maximum, predictable profitability now? Please sincerely share your valuable insights and your strong commitment to becoming an architect of market emotion in the comments section directly below, and let us collaboratively invest with profound and measured wisdom.